Welcome to a very special edition of our deep dive, custom tailored for you, the Investopia-Media community. If you're tuning in from the YouTube investing channel, you already know that navigating emerging tech requires cutting through a pretty thick layer of Wall Street hype.
Oh, absolutely.
You've got to find the actual substance, and, well, that is our mission today. We are unpacking a massive stack of sources.
Yeah, a really hefty stack this time.
Right. I mean, we've got financial reports from Motley Fool, Zacks, NASDAQ, and then we're balancing that with heavy-duty technical roadmaps from IBM, Bain, and SC Quantum.
It's a lot of data.
It is, and we're taking all of this to figure out if quantum computing is truly the next major investment wave or, just a giant cash incinerator.
The timing on this analysis really couldn't be better. I mean, we're sitting here in early 2026 looking back at the explosive momentum of 2025.
Yeah, last year was huge.
Right. Japan even formally dubbed last year the first year of quantum industrialization. And we're seeing institutional capital just pivoting hard into this sector.
It's crazy. The buzz feels incredibly reminiscent of the early days of artificial intelligence, or even the Wild West of 1990s internet investing.
Oh, totally.
People are everywhere calling quantum the next frontier of technology. But before we figure out how to allocate capital into it, we need to actually understand what we are buying. So, okay, let's unpack this.
Let's do it.
What is the fundamental difference between the classical computers we use to trade stocks every day and a quantum computer?
Right, that's the core of it.
And to keep things out of the dense physics textbooks for you guys listening, think of a classical bit like a coin sitting flat on a table.
Good analogy.
Right. It's either heads, representing a 1, or tails, representing a 0. That binary state is the foundation of all our current data processing, everything you do on your phone.
Exactly.
But a quantum computer uses qubits. And instead of a flat coin, a qubit is a spinning coin. While it's spinning, it exists in a state of superposition, essentially acting as both heads and tails simultaneously.
And that visual is crucial because it illustrates a fundamental shift in mathematics, not just hardware.
How so?
Well, with a classical system, adding more bits gives you a linear increase in processing power. It's kind of like adding lanes to a highway.
Makes sense.
But a quantum system with qubits can process 2 to the power of n states at the exact same time. It's an exponential leap.
Okay, let me make sure I'm connecting the spinning coin analogy to real-world applications.
Sure.
If classical computing is trying to solve a complex maze by running down one path, hitting a dead end, backing up, and trying the next one.
The sequential way.
Exactly. Then quantum computing is like flooding the entire maze with water to map every single path simultaneously.
That is a highly accurate way to look at it. Because of that parallel processing ability, quantum computers are uniquely designed to simulate complex nature.
Like healthcare, right?
Yeah, take drug discovery, for example. Our current supercomputers really struggle to simulate complex molecular interactions at the atomic level because the variables are they're too vast.
The math gets too big.
Way too big. But quantum systems are already being deployed to simulate the cytochrome P450 enzyme, which is critical for understanding how the human body metabolizes pharmaceuticals.
Which means we could theoretically bypass years of trial and error in a physical lab.
Exactly.
And looking at our sources, I mean, it goes well beyond healthcare.
Oh, absolutely.
We're talking about discovering entirely new synthetic materials that could double the energy density of electric vehicle batteries, or running massive multivariable models for global logistics routing and real-time financial markets.
It is the ultimate optimization engine. But the journey from a spinning coin to a functioning commercial optimization engine, well, that's where the friction lies.
Which brings up the running industry joke I have to throw at you.
Another one.
Quantum has been 10 years away for the last 30 years.
Yep, that's the one.
Let's do a reality check on the timeline here. Are we looking at 5, 10, or 20 years before this is actually commercially viable?
Right. To map the timeline realistically, we have to divide the evolution into 3 phases. Currently, we are moving through the NISQ era. That's noisy, intermediate-scale quantum.
And that's the experimental phase.
Highly experimental. The qubits are fragile, they're easily disrupted by environmental noise, and the applications are incredibly narrow right now.
Okay, so what's phase 2?
The next phase is the advantage era, which the industry expects to hit between 2026 and 2030.
So we're right on the edge of that.
We are. This is the tipping point where quantum systems consistently outperform classical supercomputers on specific, highly valuable tasks.
And then phase 3.
Beyond 2030, we enter the fault-tolerant era. That is the holy grail. That's where systems are fully error-corrected and capable of solving those massive world-changing problems we just outlined.
And what's interesting in the sources is they emphasize that we aren't just theorizing about these phases anymore.
No, we're not.
We are actually seeing hardware milestones that prove the timeline is accelerating. Like Google's Willer chip recently demonstrated exponential error reduction.
A huge deal.
And then you have IonQ hitting its hashtag AQ64 performance benchmark months ahead of schedule.
Let's break down why that hashtag AQ64 benchmark matters, actually, because the metric itself kind of tells the story of the industry.
Go for it.
So AQ stands for Algorithmic Qubits. For a long time, companies were just bragging about raw physical qubit counts.
Like a spec sheet race.
Right. But physical qubits are noisy and prone to collapsing. Algorithmic qubits measure actual, usable, error-corrected calculating power.
Got it.
It means taking multiple unstable physical qubits and using software to bind them into a single, reliable, logical qubit.
So it's essentially a measure of quality over sheer quantity.
Exactly.
And IBM is pushing that boundary even further. Looking at the Bain report, they've laid out a fiercely aggressive roadmap specifically targeting a 200 logical qubit system called Starling by 2029.
And planting a flag in 2029 gives the market a very firm, auditable timeline to measure progress against.
It makes it real.
Yeah. When a company with the legacy and capital of IBM commits to a public roadmap for logical qubits, it forces the entire sector to accelerate. It signals to institutional investors that the transition from a science experiment to industrial manufacturing is officially underway.
Here's where it gets really interesting. Let's pivot from the physics lab to the stock market.
My favorite part.
Because you, the listener, need to know how these different architectural approaches translate to publicly traded companies. So let's analyze the pure play quantum stocks.
The most prominent starting point is IonQ, trading under the ticker IonQ.
Right.
Their architectural approach is fascinating. They utilize trapped ion technology.
What does that mean in plain English?
Well, rather than trying to fabricate artificial qubits on a silicon chip, they use naturally occurring ytterbium and barium atoms, trapping them in an electromagnetic field.
So they're literally performing computations on suspended atoms.
Yes, and because every single barium atom in the universe is perfectly identical, the baseline stability of their system is incredibly high.
That's wild.
And from a hardware logistics standpoint, this system operates near room temperature.
Which is huge.
It's a massive operational advantage. It translates to an incredibly high 99.99% two-qubit gate fidelity.
And fidelity is simply the accuracy rate of the operations, right?
Exactly.
And from a balance sheet perspective, IonQ has really weaponized that technological stability. They're sitting on a $2.4 billion cash reserve.
That's a massive runway.
Compared to typical early-stage tech ventures, yeah. And they're using that capital for a platform expansion strategy, aggressively acquiring companies like Oxford Ionics to piece together a full-stack quantum ecosystem.
Very smart move.
But let's look at the other side of the hardware coin. How does IonQ contrast with a competitor like Rigetti?
So Rigetti, ticker RGTI, they take a completely different path. They build superconducting chiplets.
Okay.
They're essentially printing artificial qubits onto circuits. The primary advantage here is raw speed. Rigetti's superconducting technology operates roughly 10,000 times faster than the trapped ion systems IonQ is building.
Okay, let me play devil's advocate for a second. Rigetti is 10,000 times faster, but the Zacks report shows their fidelity rate is around 99.5% compared to IonQ's 99.99%.
Right.
Why does a 0.5% difference in accuracy even matter if the processor is that much faster?
In classical computing, a 0.5% error rate might be manageable. But in quantum mechanics, errors cascade exponentially.
Oh, I see.
Yeah, if your operations aren't pristine, the entire calculation just falls apart into random noise before it finishes.
So speed doesn't matter if the answer is gibberish.
Exactly. And to try and mitigate that noise, Rigetti's superconducting chips require extreme cooling. They use these massive dilution refrigerators, chilling the hardware with isotopes of helium to near absolute zero.
Wow.
Colder than interstellar space.
That sounds incredibly extensive.
It is. That infrastructure is bulky, expensive, and brutally difficult to scale compared to a room temperature system.
That sounds like a massive commercial bottleneck. Now, there is a third pure play we need to touch on, D-Wave, ticker QBTS. They don't build universal gate-based computers like IonQ or Rigetti, right? They focus on something called quantum annealing.
Correct. Quantum annealing is a highly specialized architecture designed specifically for optimization problems.
How does that work?
Imagine dropping a ball onto a bumpy, mountainous landscape. Gravity naturally pulls it to the lowest valley. Quantum annealing uses quantum mechanics to instantly find that lowest energy state, representing the optimal solution to a problem.
Okay, and while it might not be a universal computer, it has real commercial traction today.
It really does.
D-Wave boasts over 100 enterprise customers, including giants like Volkswagen, who are using this annealing technology for real-world supply chain routing and manufacturing optimization.
And the commercial viability is their major moat. However,
Yeah.
when we evaluate these pure plays, IonQ, Rigetti, D-Wave, we have to contextualize them against the broader market. Big tech competitors, IBM, Google, Microsoft, represent vastly safer, diversified bets.
Because they have other businesses.
Exactly. They are pouring billions into proprietary quantum programs. But if the quantum commercialization timeline gets pushed out another 20 years, Microsoft isn't going bankrupt.
Right.
They still have global cloud and software empires generating massive free cash flow.
That transitions perfectly into the macro financial picture. If these pure plays survive, or if big tech scales this hardware successfully, the projected upside is almost difficult to wrap your head around.
If we connect this to the bigger picture, the total addressable market for quantum computing over the next decade is staggering.
The TAM is massive.
Based on current enterprise integration projections, quantum could unlock anywhere from $100 billion to $250 billion in sheer market value by 2035.
And a massive chunk of that TAM is insulated by government spending. We aren't just relying on corporate adoption.
No, the defense sector is huge here.
Right. The 2026 National Defense Authorization Act, the NDAA, features 11 specific quantum amendments. Furthermore, DARPA's Quantum Benchmarking Initiative proves that federal defense agencies view quantum not as an experimental IT upgrade, but as critical sovereign strategic infrastructure.
And having a guaranteed public sector floor is incredibly valuable for a developing industry.
Definitely.
But the private enterprise adoption is where the exponential value lies. We touched on drug discovery earlier.
Yeah.
In the pharmaceutical sector alone, fully integrating quantum simulation could unlock up to $500 billion in value.
500 billion.
Just in pharma. It fundamentally alters the economics of the industry by stripping out years of expensive, dead-end physical trials.
So what does this all mean? We have massive addressable markets, sovereign government backing, and hardware that computes with individual atoms. It sounds like a guaranteed home run.
It does sound like it.
But for an investing audience, we know there is always a trapdoor.
This raises an important question. What if the foundational premise is flawed?
The bear case.
We have to take a highly analytical, objective look at the bear case. The harsh reality is that reaching that post-2030 fault-tolerant era is not guaranteed.
Not at all.
Highly respected physicists and mathematicians have published papers arguing that quantum error correction might actually be fundamentally impossible.
Impossible.
Yeah, they argue that environmental noise will always outpace our ability to correct the qubits. If you cannot perfectly correct the errors, you cannot build a commercially viable large-scale quantum computer, period.
And while these companies are battling the fundamental laws of physics to prove it is possible, they are burning cash at a terrifying rate.
Terrifying is the right word.
Look at the balance sheets. IonQ lost over $510 million in 2025.
That's a massive burn rate.
To fund their R&D and maintain that cash reserve we talked about, they had to raise $2 billion via an equity offering. For anyone holding the stock, that level of shareholder dilution is a brutal reality of investing in pre-revenue, deep tech hardware.
The cash burn creates a severe perpetual headwind. And when you pair that dilution risk with current valuations, the volatility becomes extreme.
Wow, the multiples are crazy.
These pure plays are trading at astronomical price-to-sales ratios. You're looking at multiples north of 300x for IonQ and well over 1,000x for Rigetti.
1,000x.
The market is pricing these stocks for absolute perfection, pulling forward revenues that may not materialize for 5 to 10 years.
I look at it like a high-stakes poker game. The pure plays are forced to go all in on almost every hand just to stay at the table, while big tech is sitting across from them with enough chips to buy the casino.
That's a great way to put it.
I mean, Alphabet has over $127 billion in liquidity. If a small pure play actually achieves a fault-tolerant breakthrough, Alphabet or Microsoft could simply leverage their balance sheets to outspend, outmarket, or outright acquire the technology to capture the market share.
The existential threat from big tech liquidity is the primary risk factor for any pure play investor.
That brings us to the ultimate question for you, the investor, looking at this space. Is quantum computing truly the next AI-level foundational opportunity, or are we looking at a repeat of the early 2000s clean tech bubble?
Right, clean tech wave.
Which generated unbelievable hype, but took 2 decades to actually generate positive returns.
The clean tech comparison is common, but it really misses a critical architectural detail.
Which is?
The early 2000s clean tech wave required massive, continual government subsidies to survive against entrenched fossil fuels. Quantum is taking a completely different commercial route. It is adopting what the industry calls a hybrid mosaic model.
Meaning it's not trying to displace the silicon chips we currently rely on?
Precisely. Quantum computers are never going to sit on your desk or replace your smartphone.
Good to know.
They'll be deployed in massive data centers, acting as highly specialized accelerators running alongside classical CPUs and GPUs.
Working together.
Exactly. When you view quantum as the ultimate compute engine designed specifically to supercharge AI, the investment thesis crystallizes.
Okay, how so?
Large-scale machine learning is currently bottlenecked by massive data loading constraints. Quantum systems are uniquely positioned to solve those exact bottlenecks. Because quantum integrates directly into the existing multi-trillion-dollar AI infrastructure build-out, it represents a foundational shift rather than an isolated speculative bubble.
So it's the missing hardware link that will allow artificial intelligence to take its next massive leap in capability.
Exactly.
That is a compelling thesis. As we wrap up this deep dive, how should you approach positioning your portfolio in this sector? If you're going to allocate capital into quantum stocks, it requires a strictly long-term mindset.
Strictly long-term.
This is not a space for swing trading or quick flips. It's suited only for investors with a high-risk, high-reward appetite who are fully prepared to weather intense valuation volatility and inevitable shareholder dilution.
From a portfolio construction standpoint, the most prudent strategy outlined in the research is the barbell approach.
How does that work here?
On one end of the barbell, you allocate a small percentage to the high-risk, speculative pure plays like IonQ or Rigetti. These offer the massive, exponential upside if their specific architectural bet wins the hardware race.
And on the other end?
On the other end of the barbell, you anchor the trade with the safety, massive liquidity pools, and reliable free cash flow of established tech giants like IBM and Alphabet. That way, you capture exposure to the quantum revolution without betting your entire portfolio on pre-revenue startups surviving the next decade.
A barbell strategy perfectly balances the extreme risk profile of the sector. Now, before we sign off, I want to leave you with one final, deeply provocative thought that we derive straight from the security briefings in our source stack.
This is the scary part.
It really is. While we focus heavily on optimization and AI, quantum hardware possesses a chilling capability breaking modern cryptography. Right now, there is a silent global cybersecurity threat unfolding known as Harvest Now, Decrypt Later. Malicious actors and state-sponsored intelligence agencies are systematically stealing and hoarding massive ocean-sized data sets of highly encrypted information.
They can't read it today.
No, they cannot read this data today, but they are stockpiling it, patiently waiting for the dawn of the fault-tolerant quantum era. Consider the gravity of this, your most secure data banking records. Proprietary corporate trade secrets, national security communications might already be sitting on a server in a hostile nation, just waiting for a quantum computer to finally forge the key that unlocks it all.
It's a sobering reminder that when this technology fully arrives, it will fundamentally rewrite the rules of global security.
Absolutely. Please remember, this discussion is for informational purposes only and is not financial advice.